Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gregg, and I provide online divorce mediation and valuation services in St. Louis, Missouri. Today, we will discuss business valuations and changes in the IRS for 2022 with a former IRS auditor, Mike Gregory. Mike Gregory is the founder and owner of Mike Gregory Consulting, LLC. He brings 28 years of experience with the IRS in a variety of capacities. During his last 11 years with the IRS, he was an IRS territory manager with responsibilities for up to 23 states, with an emphasis in business valuation and specialist issues nationally. He's also was involved with creating and talking to the IRS about the discounts for lack of marketability and also reasonable compensation. The other book that he has written is called The Collaboration Effect, which basically brings together neuroscience and kind of negotiation techniques in order for you to work with the IRS if you needed to in some capacity. A couple things that we don't always know what's happening is how the IRS views some of these business valuations and kind of what triggers them to take a closer look, right? Because that's not really what we want them to do. So what are the few of the changes that you can or we can expect to see that you've kind of identified in the IRS related to business valuations that's coming down the pipeline for 2022?
Well, first of all, I want to say the IRS has a goal to do a quality audit. The quality audit is defined in the Internal Revenue Manual. The IRS also tells Congress each year they're going to do a certain quantity of returns. So a certain number of estate tax returns by different sizes or gift tax returns. Now, they used to publish that and let the public know that until 2014. Since then, they haven't shared that with the public ahead of time. But every year they come up with the IRS data book, and it says, this is what we did the previous year. And I'm going to share some statistics out of that. The IRS also has identified for the Small Business Self-Employed Division, which is where the estate and gift tax program is, issues they're planning to focus on in 2022. That's the year from October 1, 2021 through September 30th of 2022. And they've said they're going to focus on reasonable compensation issues associated with the Tax Cut and Jobs Act, and then various 1120S, 1120, and partnership activity codes. There's a tie-in with estate and gifts with LB&I, Large Business International Division. And they've said in there they're going to focus on S-Corp distributions, S-Corp losses greater than basis, partnerships, built-in gains, and they have issue practice networks on different issues related to valuation, including reasonable compensation. Well, with the IRS taking a look at 2022 on estate and gifts, they have some real issues here. It used to be you filed these returns on paper, and they were sent to the Cincinnati Service Center, which is in Covington, Kentucky. Had about 3,000 employees there. That's closed down, and they've transferred all that to the Kansas City Service Center. Well, about 1,000 of the people who were in Covington, Kentucky are still there. And historically in Covington, Kentucky, I had 5 different business valuers located across the river in Cincinnati and one in Louisville, and 2 of those people would have gone to the Cincinnati Service Center about once every 2 weeks to once every 2 months, depending on how many estate and or gift tax returns came in. And 2 attorneys would have shown up from somewhere USA. And that group of 4 would have looked at the most recent ones that came in and looking at some classification techniques, which are continually changing depending on the number of returns that come in. They would be identifying which ones were identified nationally for classification. If the attorneys came from, for example, Missouri, they wouldn't classify any returns from Missouri. They want this to be kind of a blind classification process. But it's a demand pull process. Demand meaning the local estate and gift tax manager, let's say in Chicago, would say, I need 400 returns. And they would come with this national classification. And if there were 400 returns for Illinois, they would give them those 400 returns. If there were 300 that met the current national classification process, they might only get 300, and 100 could come from anywhere USA. Well, that group that came in, they did this by hand because we're still filing these returns on paper. When we shifted to the Kansas City Service Center, they didn't bring the people with them. And Kansas City doesn't have any valuers in Kansas City anymore. So they put together an algorithm to try and address this. And I'm going to share some statistics with you here in a little bit about how well that algorithm is or isn't working, and some dysfunction with the IRS here too. So the current process nationally has some problems. And if it makes it through the national classification process, there's a local classification process. And those folks are looking for some specific issues. And they have found that historically, on looking at issues, there are a number of things that rise to the top. Starts off with discounts for lack of marketability and various discounts for lack of control. They want to make sure you have the right standard of value, that is fair market value. They're looking at tax affecting on S corps, and I'm going to share a court case with you here, several court cases with you here in a little bit. They talk about math errors, and I'd say 1 out of every 3 appraisals they find math errors in. It wasn't intentional, but sometimes the appraisers haven't updated the spreadsheet with what they intended, so the numbers don't necessarily add up. Sometimes that's not material. Most of the time it's not, but sometimes they can be. And then they're looking for a strong narrative. You need to tell a story. It's one of the biggest things. Tell a story that makes sense. And the larger the taxpayer, the larger of the estate, I should say, or the gift, the higher probability of an audit. And it needs to be logical. The report needs to follow its standards. You need to have documentation. That gets into information document requests. And the 3 most common areas are discounts for lack of marketability, reasonable compensation, and tax affecting on S corps. Those are the 3 biggest issues.
Now, you said that the IRS issues out kind of the report from the past year. What is the name of that? Like, can regular people have access to it too?
Yeah, it's not written for you.
Okay.
For me, it's the IRS data book.
Okay.
So I go and I look at the IRS data book and I take several tables out of there. And I put these together in some documentation. Hang on a second. I have a PowerPoint that I'm just going to bring something up in here and just share with you some overall observations from what I have in this spreadsheet. Just a second. Here we are. If you were to take a look at the percentage of returns that were audited in 2018, broad statistic, estates were about 8.2% and gifts were about 0.8%. In 2019, this dropped by about a third. The states were 6.9%, but gifts remained the same, about 0.8%. And if we break them up, they broke them up into less than 5 million, 5 to 10 million, and greater than 10 million for estates. So in 2019, for estates less than 5 million, they audited 2%. For 5 to 10 million, they audited 9.2%. And for estates over 10 million, they audited 21.7%. Overall, 6.9%. Now you have to understand, a lot of estates are just very simple in the sense that they're real property. They have liquid assets, they have mutual funds, they have stocks, they have bonds, and those things are pretty straightforward with public stocks. It's the ones that have closely held firms with them. That's the overall number that I just gave you, but clearly the ones that have issues that I've just mentioned, that's the ones we're going to take a greater look at. But now I'm looking at another table here. And when we get to 2020, I don't get the breakout anymore by less than 5 million, 5 to 10 million, greater than 10 million. I just have estates total. So listen to this in terms of the number of estates. In 2018, there were 33,000. That's been pretty standard, 32 to 34,000. In 2019, it dropped to 26,000. In 2020, it dropped to 15,000. That's half. What do you think? Are less people dying? I don't think so. And here's another statistic. The average amount of tax from 2020 on estate tax returns was about 264,000. For over 10 million, it was around 408,000. But the average refund used to be about 10% of the tax from the return originally. Well, this is phenomenal. In 2020, the average refund on greater than 10 million was $502,000. The average refund for all estates was $365,000. That's a lot of money. It's a very big difference.